today's video, I'm going to go over some of the trades that we end up taking throughout the week, how we took them, why we took them, and just the results of those trades and why they worked out, why they didn't work out. So yeah, I'm going to cover the trades that we took from Monday to Thursday, and then tomorrow I'll cover the trades on what we did Friday. So to start off the week, this is what we looked like on the 30-minute chart. So comes out I trade, we use Friday contracts on the option charts to tell me the trend in the market. And right here, this is the SPY chart. So this is the 680 put, 690 call. 690 call is obviously over here, but this got destroyed throughout this week because we pretty much just dropped. And then on Friday, obviously we had a little bit of a rip. But mainly this was the chart that was getting watched throughout the week because we were kind of just dancing around this 10 crossing with the 50, then it crossed negative on like Thursday into Friday. And the calls side really doesn't tell me much because these contracts got destroyed throughout the week. And yeah, you can see right here, when was this? Monday. Where was Monday? Monday was all the way down in here. So pretty much this chart tells me, okay, 10 SMA is below the 50. The Bears or the Bulls don't have any trend. For us to have trend, this 10 SMA has to be above the 50, and the 50 SMA has to be curling up. So you can see right in here, 10 SMA went above the 50, but this 50 SMA was sloped down the entire time. So there's no that was not a valid cross that happened. And so, you know, this chart ended up crossing back negative, and we saw a move to the downside. When we get these negative crosses, you know, from one trend to another, even though this wasn't like a trend, this is pretty much a failed take of the bullish trend because the 50 never curled up. So at that point, once we, you know, lose the 50, cross negative, that pretty much tells me we're most likely going to see a move lower, and that's pretty much what happened. So on the put side to start the week, you can see where's Monday? Monday was right up in here. Bit of a choppy day on Monday. There really wasn't much going on. The 50 SMA was being very weird. I mean, it was sloped down pretty much the entire day. There was like slight curls of it, but when we get the super choppy price action, I obviously don't consider this a true trend yet. Once we get the 50 to curl up like aggressively and really get some good movement going, like right in here, this candle, you can see 50 sloped up nicely. It was sloped up pretty much the entire way into, what day is this? Into like end of the day on Wednesday and into Thursday. So once we get this, you know, 50 to curl up nicely, price action's pretty good. Okay, bears have the trend. As long as this 50 holds, I favor lower. So that's pretty much what the thought process was throughout the entire week. And once we lose this 50 and cross negative, most likely we see a move higher, and that's what ended up happening. Thursday, we obviously lost the 50, crossed negative, and we end up seeing the move higher into Friday. So that's what pretty much this 30-minute chart looked like and how I read it. When it comes to our trades, I get my entries off of the 0DT chart on SPY. That's where I take my intraday trades. You could definitely go ahead, like on this day right here. What day was this? Wednesday or Thursday, or I mean Tuesday into close, we end up hitting this massive support. If you wanted to, you could have grabbed an options trade right here for like a day or two out expiration and swing some puts because this is your major support on the put side. And most likely this was going to hold going into Wednesday with how this 30-minute chart looked. 50 was sloped up nicely. It's a good, you know, 50 dip to buy, and you would have been paid if you taken it. But for me, I usually just take the intraday trades off of the 5-minute on the 0DT contracts for SPY, and then the regular stocks, which I'll go over, I do take my swing trades off of. So when it comes to entries, this is what we got. So let me drag this over. So to start off the week when it came to SPY, I didn't end up taking this trade, but it was a valid trade to take on the 12th. What day was that? Monday? This is actually Friday. My bad. This is actually Friday. But this was a trade that ended up playing out. It wasn't something that I ended up taking, but you can see we got this put cross right here. I actually think I didn't take this because if this was Friday, then yeah. So I actually didn't take this because we were at this 50 SMA on the put side. Even though it worked out, that wasn't really a trade I was interested in. And yeah, sometimes the trades, when we're sitting right at this 50 SMA, will play out and we'll rip above it, but it's just not a high quality trade. So I sat out of that trade. Even though this cross did work, wasn't a trade I wanted to take, wasn't one that, you know, was a really good setup to take because we were at that key spot on the 30-minute 50 right here. This 30-minute 50, major resistance point, not worth taking the trade. And yes, it worked out, but it wasn't a high quality setup. So I sat out of that one. And then on, what day was this? The 15th, which is Monday, I ended up taking this cross right here. This 10 SMA crossing above the 50. I ended up taking, let's see, what did I put? I think I just took puts on this on the 0DTs. I ended up taking the, what what did I take on this? Did I even take this? Actually, maybe I didn't actually take this. I'm thinking of the next day, on the 16th, I ended up taking. So there was a little cross for here. You probably could have squeezed some points on, but I didn't take it. I thought I took this, but I guess not. I'm thinking of the next day. But there was a little cross right here. You probably would have ended up getting stopped on this, possibly, depending on your entry, because the 50 SMA didn't end up crossing probably until this candle right up in here. So that was probably like 10.20, and then didn't really get much of a move, and probably would have gotten stopped on the pullback to the 50. So I didn't take that trade. I think what day was this? Oh, the 15th. So if we look on the 15th, was action pretty choppy. I think that's why I didn't end up taking it. What day was that? Was the Monday? Yeah, that was Monday. So yeah, you can see this action right up in here. Very, very choppy. That's why I didn't end up taking that trade. Price action just wasn't favorable, so I sat out. That's kind of like one of the key things when it comes to trading the system, is when we have that very bad action, you have to recognize that, and you got to know that the crosses probably won't net a lot of moves. If we're really choppy, best thing to do is just sit out and wait for the action to get better. So I didn't end up taking that one. And then this is the trade we end up taking here. On Wednesday or on Tuesday, we got this 10 SMA crossing with the 50. We got a very explosive move very quickly. This was a really good move. We end up catching, I think, like 65-70% on this. I trimmed half, and then I just ended up exiting all once we started to pull back a little bit. So really good trade. Like I said, 65-70%. Call that out inside the Discord. And yeah, one and done for the day on the 16th, and then on what was it, the 17th, we ended up taking another trade. And to start off, before I get into that, this 2-hour chart was pretty key going into the week. So we know we're crossed on the 30-minute chart. So that tells me the bears have the trend, and we have to look at the higher time frames to see how far this is going to go. So after we hit this 2-hour 50 up in here, pulled back a little bit, came back up to test it, it pretty much looked like this was going to break and cross again. And I told Discord, if this breaks and crosses, we're going to see the 4-hour 50, which was all the way up in here. And that did actually end up playing out, and we ended up getting to the 4-hour 50 all the way up in here. So that's kind of how you use the higher time frames to gauge how far this is going to go. The 4-hour and the daily are super, super strong areas that you want to look out for, because this is where we reverse like 85-90% of the time when we're seeing when we have a trend in the market. The 4-hour 50, daily 50, those are pretty much where the trend gets ended a lot of the time. Not saying that we can't cross on those, because we definitely do at like sometimes when we get explosive moves down, but that 4-hour 50, daily 50, very crucial spots. When we pull in those areas, that's where you pretty much want to be all out of your shorts or longs, whatever you're trading and what direction you're trading into. So when we came up into that 4-hour, this was the day before CPI. I did favor higher just a little bit, just because of that 4-hour 50. It's a major pivot point in the market, and obviously on CPI day, we end up ripping a little bit higher, and then into Friday, we end up ripping even more. So that's how pretty much the higher time frames work. Once we kind of break the 2-hour and cross, like here, that's pretty much how I was reading it. Where did that chart go? Once we come up into that 2-hour, it's like, okay, if this breaks and crosses, we're going to go most likely see that 4-hour 50. We got the cross right here. 10 SMA went above the 50 on the 2-hour chart. Obviously, this is a little bit of a late screenshot, but we end up ripping up into that 4-hour 50, and that was pretty much where we end up bottoming out at. Obviously, we're not really positioned for anything going into CPI because it's a complete gamble. Don't really know where we're going to go. Could have easily went the other way. Could have nuked us into the daily 50, and that probably would have marked the bottom, because in my video the day before CPI, I said if we open red, most likely that gets bought up because we're going to be at that major pivot point on the daily time frame. So that's kind of how that ended up like unfolding. But this is another day right here on, what day is this? We end up pulling back to the 50 on, I believe, what day was that? Tuesday? Or Wednesday? Yeah, the Tuesday at the close. That's where we ended up closing at. Major pivot point. This is a very, very bearish chart. 10 SMA is above the 50 on the puts. We know the market's trending bearish as long as that 50 SMA holds. And since the 50 is sloped up very aggressively, I favor this going lower into the next day, and that's what we ended up seeing. You can see where's that screenshot at that I had? Yeah, right here. You can see that was pretty much the bottom right there. The next day we ended up opening a little bit green, and this is where we got a trade opportunity. So this is the following day. Calls were crossed. Wasn't interested in taking any trades to the upside because we know that the overall trend is bearish. So with that in mind, what do we look for? We're looking for an entry to the downside. You could get this one of two ways. You could get a negative call cross or a positive cross on puts. Since calls were crossed a little bit after open, I was looking for this chart to cross negative to take our entry to go short. So this is where we got our entry point. 10 SMA crossing below the 50. I entered on the previous candle, I believe at like 0.6. We got a little pop, saw some drawdown, and this 50 SMA is your line in the sand. So I told the Discord, if we close below the 50, I will stop out. And that never ended up happening. We ended up rejecting off the 50. Looked really good from here. And this is on the opposite side of the premium. So you can see that this is at, well, like 1024, 1025. And then this is at like 1035. We saw a massive move lower on the put side. And we caught a really big move out of this. I think I caught like 250% on this. So yeah, I ended up taking 0 DT puts on that negative cross right here. And I sold most at like 70% because we end up pulling into this 50 SMA on the put side, which is your intraday resistance. But since the overall trend was bearish, I did hold some runners, and instead of just waiting for the put cross, I just held my runners, and we saw a massive move lower, and we caught over 250% on that negative cross and on the 0 DT chart. So that's pretty much how I went about taking the entry on Wednesday. Very simple, 10 crossing below the 50 on the call side, and just scaled out at this 50, and then scaled out even more once we saw a move lower. So again, just a one and done type of day. Like a lot of these days, I'm looking for one trade on SPY, and whatever happens, happens, and we pack it up. I mean, you catch a good move for the day, no point to stick around, especially with how the action was previously. It was very bad. It's December, probably won't get the best action, so not really worth taking a risk, putting more risk on the table when we already got a good trade for the day. So that's what we did on, what day was that? Was that Wednesday or Thursday? I think that was Wednesday, I believe. What day was the 17th? So that was Wednesday. And then on Thursday, I ended up taking another trade, another cross we ended up trying, and we saw a good move out of it. So I literally just went over this in the last video, but I will show you guys what we took in case you're new and didn't see that video. But it was a simple 0 DT cross on the put side right here. This is my entry. Reason why I'm taking this entry: 10 SMA going above the 50 here on the puts. 50 SMA starting to level out. It is a slight bit early. You could have waited for the next candle in 2 minutes, but with how we looked, I was favoring downside, so I got in here. You could have waited 2 minutes. It didn't really make a difference if you waited or not, but that's where I got my entry. And here's the move we got. We did see some drawdown on this. I did tell the Discord, this is a higher risk trade, so I went lighter, but I was holding for more percentage because you can see the time here, 3:05 p.m. So that was like, I was probably in this like around like 2:30, 2:40. So given it's late in the day, the 0 DT charts are going to be moving a lot quicker because they're closer to expiration. So the 0 DTs are a lot more volatile. So I was sized in for a bigger move. So my stop loss I knew was going to be, if I did hit it, would have been like 50-60% probably. And so I wanted to hold for a bigger move. So I trimmed a good chunk, like between 100-110%, and then I ended up just holding a runner at that point, which got stopped at break even. So on this leg lower right up in here, I sold majority, held a runner to break even just in case this did want to just trend aggressively into the close. Didn't end up happening, but we did catch a good move out of it. And again, we took that. That was the only trade for SPY that day. It took forever to get a setup, but we got it executed, and we got a good trade out of it. So that's pretty much what we did for SPY the entire week. We went 4 for 4 on the SPY crosses or SPY trades. I'll go over the trade we took on Friday tomorrow, but we did hit another good SPY trade. So yeah, really good week for SPY. I did take some losses when it came to individual names. First one was Google. I could just show you this real quick. It was a simple trade idea. If we pull up Google real quick, this is what I'm going to go over that tomorrow. I forgot. I took that on Friday, actually. So I'll save that for Friday. But to start off the week, we ended up catching Tesla. If you guys watched earlier in the week, this was the trade I took on Tesla. Again, it's a simple thing. This is like the same concept as the SPY 30-minute charts. I mean, when we cross, we're trending bullish or bearish depending on what, if it's calls or puts we're crossing on. And on Tesla on Friday, we were crossing on the call side, and we saw a very explosive move on Monday. I got an early entry on this. I actually entered the 475 contracts at, I think, 372. I know these aren't the ones, but next screenshot you'll see what those got to. But There was so much flow on Tesla on Friday. The 500 calls for the 19th got absolutely lit up. There was like insane volume on them. So I got an early entry. I knew this was going to cross, so I got in. And bang, there's the move off of open. I was in these at 372 playing this cross, and we got a very, very big move out of it, 250%. I think it went closer to 300, but I ended up trimming most around that, probably like 160 to 200% mark, and then held some runners, and it's trimmed on the way up. And then as it pulled back, I just got out. So that's what we did on Tesla. Really, really good move. That was a high conviction trade going into the week. And yeah, best trade of the week by far. And all we had to do was just hold overnight, hold 5 minutes in the open, and we saw the big move. So Tesla, really good trade. And then when it comes to individual names, I think that was one of the only ones we took when it came to the system. We ended up taking Google, I think, on Friday. We actually took this on the 18th. My bad. So I will go over this. So Google, we ended up taking just a 50 dip. Very simple 50 dip here on the 30-minute. So we came down in this 50 and bought the 50 dip. I know this says the 26 contracts because I changed them on Friday, but this is on Thursday. It's the same concept though. We ended up buying the 50 dip and we ended up losing the 50, so I stopped out. It was like a 35% loss. Reason behind the trade is very simple. This chart was crossed on the put side, so it has trend. This is where the 50 estimate is where you want to buy the dip in the trend. We obviously bought the dip, and of course it didn't end up holding this time, but it was a valid trade to take, good setup, and just didn't end up playing out. So yeah, that's a loss we ended up taking on Google. And then I took some individual trades on let's see here, what day was this? The regular chart, which I ended up stopping out on. One was BBAI, the other one was RR, and those just didn't end up playing out. It was a simple breakout trade, and the only reason they didn't work out was because obviously SPY had the trend to the downside. So at that point, I think I just have to, from going forward, when SPY is more bearish, I'm not going to look for breakout trades. Because if the market is trending overall bearish, or is going to see a move lower, a lot of the names are going to end up following that. So my new thing going forward is just going to be, when I favor SPY, ripping, or even if we're just neutral, I will look for those breakout trades. If we're trending bearish or charts look a lot more bearish, I'm not going to enter those. And yeah, obviously I paid the price for those ones, but yeah, we ended up stopping out on 2 of those trades, and then I took one more, which was XRX on lighter size, and ended up taking like a 20-25% loss on that. So those were some individual names. It was just simple breakout trade, closing above a high on the previous day. Nothing too crazy about that, but that's pretty much what we did throughout the week. I'll video up tomorrow going over the trades we took on Friday and the game plan going into this week on what we're going to be looking for. But that's all I got. If you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. That's where I'm at all day, every day. That's a place to be if you want to learn. That's all I got. I'm out. Peace.